Okay, so I want to break down the trade that I took on GBP/USD. So this trade gave me 1:5 reward ratio based on the setup that I had on GBP/USD. So you just have to pay careful attention as I explain how I was able to take this trade on GBP/USD. So before I start, let me show you the trade. Let me show you the Alright, so this was a setup on GBP/USD. So this was when it started playing, and this was when ATP, and I had a second entry as well. So I'm going to explain in detail how I was able to take this trade. So like I said, I feel encouraged when you like, when you comment, when you share the video. Alright, so if my channel is helping you, do well to subscribe, do well to like, do well to comment, and also do well to share the video. Share the channel link with your friends. Alright, I'm doing my possible best to ensure that those who don't have money to pay for courses can benefit, and as well you can also upgrade your knowledge on this channel. So all you need to do is to stick to one strategy, stick to one system, build a system around the strategy, backtest, know your risk to reward. Alright, as for me, my profit target, my risk to reward is from 1:3 and above. So because this strategy can give you a whole lot, it can give you 1:20 risk to reward ratio, can give you 1:25, can give you 1:30, can give you 1:10, 1:7, depending on your satisfaction. Alright, so most time I like taking short trade, 1:3, 1:4, 1:5, 1:6, 1:7. I think the highest I have taken is 1:23 risk to reward ratio. Alright, so depending on your satisfaction, me, I don't like staying long in the market. Just of a recent, I can take trade and leave it to play for days. Alright, so depending on your satisfaction, this strategy can give you a whole lot. And if you wish to join my mentorship program, my contact is on the description of this video and is also on the comment section. Do where to join. That is a price that you have to pay, because believe me, there are things that you might not be able to get on this channel listening, but through mentorship you will be guided on trading psychology, risk management, and then the strategy as well. You will have the room to ask questions and also have access to my setup and ask questions. That's why mentorship is very important. It's a price that you just need to pay. It's a price that you just need to pay. Alright, so back to business. Let me explain how I was able to take this trade on GBP/USD. So I said that the first thing that you need to do when you open your chart is to know the direction of the market. That is very paramount. The reason why most people are struggling in this trading is because they don't know the direction of the market. If you don't know the direction of the market, as a trader, my dear, you are going to have a whole lot of challenge when you don't know the direction of the market. So the first thing that you need to do before you place any order, or before you think of taking any order in the market, is for you to know the direction of the market, which is very paramount. It's very essential for you to know the direction of the market, because if you know the direction of the market, 80% of your problem is solved on the chart. Alright, so that's what I'm going to do now. So the first thing to do is to go to your higher time frame. So I'll go to my 4-hour time frame, daily time frame, as the case may be. So uh, you can also go to your weekly time frame as well. All right, so this is the daily time frame. So on a daily time frame, market tapped this zone, market tapped at this zone, and then it started reversing. Initially market was in an uptrend. All right, when it was creating a series of higher highs and higher lows. It was creating a series of higher highs, higher highs, higher lows, higher high, higher lows, higher highs, higher lows, higher high, higher lows. So when market took out this zone here, market structure shift occurred. So market had market had market had a market structure shift here. There was a market structure shift here. So if you observe this one as well, when market was trending down, it was creating a series of a lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low, lower highs. So when this high, the lower highs got taken, we see a market structure shift has occurred, and then so market started trading up to the upside. So now on the daily time frame, we observe that market is in a downtrend. When market tapped the zone, it started reversing, and when it started reversing, it was creating a series of a lower low, lower highs, lower low, lower highs. So now we now proceed to our 4-hour time frame to observe the zone very well, to have a clear picture of what we are doing. All right, so when market tapped the zone, it started trading down. It was trending down. So we now proceed to the lower time frame, either 2 hours, 1 hour, 30 minutes, as the case may be, to look for your setup. All right, so now I already know that market was in a downtrend on a 2 hours time frame. Market was trending down, creating a series of lower low, lower highs, lower low, lower highs. So market was trending down. Market was already trending down. So this, there was a double break of structure that occurred here. So there was a double break of structure that occurred here. So market came to tap the zone. Market took out the zone here, and then this zone. So this is not what I'm explaining. This is not what I'm explaining for this class, but I want you to have a clear view what is happening. So market came to tap the zone on a 2 hours time frame. So let me explain the trade that I took, because that is what is necessary for this class. All right, so I already have a knowledge that market was in a downtrend, market was bearish. So I already got to my market structure shift. I think I made a video about that when we have the market structure shift on GBP USD. So when we already have a market structure shift, and then since the market is trending down, we'll now be looking for a double break of structure. So here, market took out this zone here, and then this is another zone. This is another zone on its own. Took out this zone, and then this is another zone. But since they align with this one, we'll not take it as a separate zone. So we now took out this zone as well. And remember, I said there are 2 points of interest that we use in trading this strategy. There are 2 points of interest that we use. We use a breaker block and also another block. We use a breaker block and another block. Now, what is another block? Another block is where institutions carry out their orders in the market. Another block is when institutions carry out their orders in the market. So we have 2 types of order block. We have the bearish order block and the bullish order block, right? So now let me explain something. Now, if you are there are three ways that market make its movement. Basically, there are two ways that market make its movement. We have the trending market and the ranging market. The trending market is divided into two, the uptrend and the downtrend. And then we have the ranging market. Alright. So now, how do we identify an uptrend? How do we know that market is in an uptrend? Now, we know that market is in an uptrend when market is creating a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This is how we know that market is in an uptrend. Then in the scenario of a downtrend, the market is creating a series of lower highs, lower lows, lower lows, lower high, lower lows, lower highs, lower lows, lower highs, lower low, lower highs. So this is a scenario of a downtrend. And then when it comes to ranging market, is when market is moving from support to resistance, resistance to support, support to resistance, resistance to support. So we can either call it a ranging market or we call it a consolidating market. Now, on a bullish market or an uptrend, on a bullish market means that it's buyers that are in charge of the market. We can have 20% of sellers and 80% of buyers. So majority will always carry the vote. So in this scenario, you can see that the number of buyers is much more than the number of sellers. So the market will keep buying. Then in this scenario, market is trending down. So creating a series of a lower low, lower highs, lower low, lower highs. So the people that are in charge of this market is sellers. But in the case of a ranging market, the people that are in charge of this market is neither the buyers nor the sellers. So we have equal buyers and equal sellers. We have the numbers of buyers and the numbers of sellers are the same in this market. All right. So I'm just rushing. I don't want the video to be too long. All right. So this is it. That is it. So now, the only thing that characterizes an uptrend is when market is creating a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So now, any deviation from these characteristics of what qualifies an uptrend is no longer called an uptrend. So instead of market to pull up and then create another higher lows, you now break the previous higher lows. If you break this zone, we say a market structure shift has occurred. And what is a market structure shift? A market structure shift is an indication that the current trend is coming to an end and the market is about to trade in an opposite direction. So whenever you see the market is in an uptrend, creating a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then you take out the last higher lows when you take out the last higher lows, you know that this is the deviation from what characterizes an uptrend. So it's no longer an uptrend. It means something is about to happen in the market. It's giving you an insight that the market is about to change direction to the opposite side. So the market is about to change direction to the opposite side, which is sell. So you wait for after the candle that causes the market structure shift close, the market is going to give you an inducement. And what is an inducement? Inducement is a first value pullback after a market structure shift or a double breakout structure. So now I said in trading this strategy, we have three key aspects in trading this strategy. One is market structure, two is liquidity, three is point of interest, and then additionally we talk about directional bias and how to take profit. All right. So now the type of liquidity that we make use of is what we call inducement liquidity. So after a market structure shift or double breakout structure, you should expect the second aspect of the strategy, which is inducement. So inducement is the first value pullback after a market structure shift or a double break of structure. So after this market structure shift, we now have a pullback like this. We have a pullback and then market pull down like this and close. So when it pull down, it will come back and trigger the unmitigated point of interest. Now, if you don't understand this, there are videos on this channel that talks about the rules in picking a proper point of interest. So now, one of the rules says the point of interest to be used has to be unmitigated. So when market was creating an inducement, you should not touch any point of interest that you want to make use of. So that is why market pull back here. So the point of interest that we are going to make use of is the order block here, and then we target our profit target will be at clearing the trend line liquidity. All right, so I'm driving somewhere, so just pay careful attention. So now on this downtrend, market was creating a series of a lower low, lower highs, lower low, lower highs. Now instead of market now to create another lower low and pull back again and create another lower lows, you now break the last lower highs. When you break the last lower high and the candle close, if it is a 1 hour candle, after the 1 hour candle close, we now mark this price as our market structure shift. So now, after we have gotten the market structure shift, we now expect a pullback. Now expect a pullback, which we call inducement liquidity. So now that pullback market will now pull back and then close like this. Remember, it can be a single candle or it can be a multiple candle. So after the candle closes, we now expect market to retrace and trigger our point of interest. So and our point of interest got triggered, we now target at clearing the trend line liquidity. All right. So now as market, since we know that okay, market structure shift has already occurred, we know that market structure shift has already occurred and our point of interest has got triggered and market is trending up. Now, when the market structure shift is a concept that we use in trading reversal. So the market is in a downtrend and the direction of the market is about to change to an uptrend. What we use in trading that concept, the concept that we use in trading that pattern is what we call market structure shift, and is a concept of reversal. Now, if market and the concept of reversal is what you use to reverse the market, is what you use to change the direction of the market, either from uptrend to downtrend or downtrend to uptrend. Now, when it comes to continuation, remember we have two aspects in trading this strategy: reversal concept and continuation concept. Now, in continuation concept is when we are looking at joining the trend. For example, as market is trending down, creating a series of higher highs, higher lows, we now look for an opportunity to join this trend. We know that okay, market is already trending up, so we look for opportunity to join. But in the case of reversal, we look for opportunity to reverse the market, to trade in the opposite direction. All right. So now, as market was in a downtrend and then he gave us a market structure shift showing us that he's going to trade in the opposite direction, gave us inducement, and then our point of interest got triggered. As market is trending up, let's say maybe you took this trade or you were not on the chart when this happened and market is trending up. So now you since you have the knowledge of what is happening in the market, that you have already gotten your market structure shift, you have gotten your inducement and your point of interest got triggered, and you're looking at opportunity to join this bullish trend because market has already changed direction from bearish to bullish. So you now be looking for what we call break of structure, and the break of structure that we use in trading this strategy is either a double break of structure or a multiple break of structure. Now, as market is trending up, we wait for a break of structure for a candle to break two key levels or multiple levels. Now, as market is trending up, this previously existing zone was taken by this candle, was taken out. All right. So this also is another zone on its own, was taken out, and then this was also taken out, I think okay, this was also taken out. So when you have multiple breakout structure, you should be more assured that that zone is going to hold. So after that, we'll now wait for inducement. Maybe inducement now pull back and then pull back to this zone, or let's say pull back to this zone and then have something like this push up. Remember, it can be a single candle or multiple candle. Now remember, according to the rules in picking a proper point of interest, one of the rules says that the point of interest need to be unmitigated. So when market touch this zone, touch this, touch this, touch this, all this point of interest has been mitigated. So we expect price to come and buy from this other block. Alright, so now let me rush through and give you the rules in picking a proper point of interest. Yes. Now, number one rule says that there must be a market structure shift or a double breakout structure. Now, we have already gotten market was in a downtrend, creating a series of lower lows and lower highs. So now when market take out this zone, we have gotten a market structure shift. So first rule, we have seen a market structure shift. Rule number two saying that the point of interest that there must be an inducement. All right. So now we have already, when market take out this zone here, e now give us inducement. This is a pullback here, give us inducement. Rule number three say that you should mark out all the possible point of interest. So if you want to mark out all the possible point of interest for this, in the case of this reversal, in the case of this reversal, so we have this breaker block here, and then we have this other block. Now, rule number four says the point of interest need to be unmitigated. So when market create this inducement and then push up, it does not touch any point of interest. So the two is still valid. Now, rule number five say that you should pick the point of interest that is closer to your inducement. So the one that is closest to our inducement is this. That is why market will buy from here. Alright. So now as market is trending up, now the next thing to do is to look for a double breakout structure. And I say double breakout structure is when market take out 2 key levels. No, now market take this zone and then break the zone, and this zone here as well. Okay, this was the inducement. So market break the zone, this candle here, break the zone, give us a multiple breakout structure. Alright. Now, if you follow the rules in picking a proper point of interest now, if you follow the rules in picking a proper point of interest, alright. Okay, now if you follow the rules in picking a proper point of interest, rule number one says that there must be a market structure shift, and we have gotten a market structure shift and market came to trigger our point of interest here. Though I did not mark it well here. So market came to trigger our point of interest here. So now market have given us a double breakout structure in this scenario. Market take out these 2 key levels, take out this zone here and then this zone as well. So rule number one say there must be a market structure share, double breakout structure. So in this scenario we have gotten a double breakout structure. It took out this zone as well. So this is a multiple breakout structure. So after this, we now expect an inducement. Alright. So let's say the inducement pull down to this zone and then push up Alright, so now rule number 2 says that there must be an inducement. So this is an inducement. So the next thing for you to do is to mark out your inducement. So the inducement will mark out our inducement here. So rule number 3 says that you should mark out all your possible point of interest. So our possible point of interest will be here, here, and then here, because it's a zone on its own, and this other block that trigger the move. So now rule number 4 says that the point of interest needs to be unmitigated. And the point of interest needs to be unmitigated. So now here this one is mitigated when market created inducement. So we will do away with this. This one was mitigated. This one was mitigated. This was also mitigated. And then the one mitigated point of interest was this zone here. So that is why we are going to take our buy from this zone. So we long from this zone here. So we'll take this buy from this zone. All the way up at clearing the trend line liquidity. So now, I will expect market to pull back to this zone, trigger my point of interest, and then rally up to clear out this trend line liquidity. Alright, so now back to what I was explaining on this chart. Now based on what I've explained, now market was in a downtrend, and then we got a double break of structure here. Market took out this zone, and took out this zone. So we now got a multiple break of structure, when market take out this zone here, this particular candle here, took out this zone, and this zone. After that, now that is the first rule. There must be a double break of structure or a multiple break of structure, which we are gotten rule number 1. Rule number 2 says there must be an inducement. So this is an inducement. Here. So we'll mark out our inducement. Now remember, there are two ways that we trade this strategy. There are two point of interest that we trade this strategy. And there are two ways that we trade this strategy. We trade this strategy using two concepts, the concept of reversal and the concept of continuation. And in taking profit, we make use of a breaker block and another block. So in a scenario where you have another block, you go ahead and making use of the other block. But in a scenario where you have a breaker block and in a scenario where you have a breaker block and multiple point of interest, you now go ahead and use the rules in picking a proper point of interest. So in this scenario, I look up if there is another block. So I look up and then there is another block here. So I'll mark this place to be used as my point of interest, because in trading strategy, I make use of other block and a breaker block as my point of interest. Now, like I said earlier, there are two other blocks that I make use of, a bearish order block and a bullish order block. So in a bearish order block, you have a bullish candle. Sorry, in a bullish order block, you have a bearish candle and a bullish candle that engulfs it. Then in a bearish order block, you have a bullish candle and a bearish candle that engulfs it. So this is a bullish order block, this is a bearish order block. This is for buy and then this is for sell. So if you have a long wick, if you have a bearish order block and you have a very long wick here, you cover only the body. If you have a short wick, you cover both the body and the wick. The same thing is applicable here. If you have a very long wick here, you cover only the body. If you have a short wick or a full body, you cover the body. If you have a short wick, you cover the wick and the body as well. Alright, so in this scenario now, you can see the order block. So this is how to cover your order block. You can see the candle close with a full body, so I have to cover it fully. So you place your order there. So that's where you place yourself from, and then your entry should be at the other block, and then this is how you mark it. You give some more room for spread. Alright, give some more room for spread, and then your TP should be just slightly below the last zone. Alright, so that is why market sell from this zone. That's why market sell from this zone. So now as market is trending down, we now look for another double break of structure. And if you observe very well, a double break of structure has occurred on this zone. This is a double break of structure. When this candle here took out this zone here, and then this zone as well. So after that, it gave us an inducement. And according to the rules in picking a proper point of interest, now rule number 1 says there must be a double break of structure. We have gotten our double break of structure when market took out these two key levels. Then rule number 2 says there must be an inducement. I got our inducement. Number 3 says you should mark out your possible point of interest. Now we have this point of interest. You have this point of interest here, this other block here. We have this breaker block, and we have this breaker block as well. And we have another other block here. Alright, so now rule number 4 says that the point of interest need to be unmitigated. So when market created this inducement, it does not touch any pure point of interest, so they are still valid. Rule number 5 says that you should pick the point of interest that is closer to the inducement, So those point of interest are just embedded together. The three are embedded together. So I'm expecting market to pull down to this zone. This is what I'm expecting from GBP USD, to pull down to this zone and use it for a sell. But I will have to wait and observe how the market approach my point of interest. If you approach my point of interest in aggressive mode, I will be skeptical about taking the trade. If you approach it in a trend-like manner, then I'll go ahead and take the trade. So I will not set a pending order on this trade. I will have to wait for a confirmation before I enter this trade. Alright, so this will be the end of the video. Thank you very much. Don't forget to like, don't forget to comment, don't forget to refer a friend, don't forget to pay for mentorship. Alright, so take care.